Yep, so obviously it depends on the geography that you're talking about. From a global perspective, we have what in the world of finance we call a risk-off environment, where investors are not as willing to take equity risk, and that applies to equity risk. So for example, large pharmaceuticals industry, the Roches and Novartises and Lillys and Mercks of this world, who normally are supposed to be defensive sectors because they have really high cash flows and people still need medicines even when the economy is not going very well, are now trading at the lowest valuation of any of the industrial sectors. And I say industrial, that's just simply to take out the financial groups because they don't trade on price earnings ratios. So the PE multiple, which is the easiest way you value a company, for the large pharma industry is the lowest amongst these companies. So that tells you that we are in a world where something spooked people about not just drug development, but generally risk-viewed investments. And pharma, and therefore certainly biotech fits that. Now, on the biotech world, the NASDAQ Biotech Index, which is probably the best proxy for how appetite is for biotech investments, is down 33% from its peak, which was on the 20th of July 2015. And that's also natural because that peak of 4,165 or something like that compares to just over 700 or 650 a few years back. So this has been a phenomenal return where people are locking in their profits. What's driving all this is uncertainty about China, which is the engine of growth for the globally. Uncertainty about the free cash that basically a lot of the central banks had been giving the market in terms of quantitative easing. Is that coming to an end? Certainly in the US it is. So the moment that the cost of money goes up, then you suddenly are in a world where people are more, they think through their investments a bit more and ask for higher returns. Is it because of what's going on in the major emerging markets and commodities? Probably, partly. So there are many factors that have led to this risk-off view, and that's impacted investments in 2016. So far this quarter, or the Q1, we had 9 IPOs. That compares to over 50 in 2015 and over 70 in 2014, and I'm talking just the US here. So it's all feeding together to make it a very tough investing environment or funding environment for biotechs. This was my first exposure to the GapSummit. And on that panel that I just sat, I think I learned that this, for the people who were in that room, the young entrepreneurs, this was invaluable. They got a view from 2 very serious, hardcore VCs. So Index Ventures, now called Medici, and also SR1, which is the corporate venture arm of GlaxoSmithKline. So you have a real normal VC, you have a corporate VC, you had 2 potential angels, and then also an analyst who looks at these stories from their inception, often from a public markets perspective, to when they come to IPO and then how they perform in IPO. I think the amount of knowledge that team had, which seemed to be on offer for the hour and 15 minutes of us on that panel, for free, obviously, it was amazing for me. So I think that a lot of the people in that room, if they can't get their decisions and views about funding and the methods to use for funding, at least partly answered or started to be answered from this meeting I've just had, this panel we just had, then there's a problem there. So there was a lot of good quality advice that went in there. And it seems to me that the GapSummit is introducing people to the opportunities of how you can go about structuring a financing world for yourself. Well, yes. So, but in any world, in any investment, there's always cycles. People come into it, people leave it. Let's look at technology. Up until 9 months ago, talking about unicorns, companies were getting $7 billion, $10 billion, $30 billion investment valuations. And of course now suddenly everybody is thinking, were they realistic? And everyone's kind of reanalyzing, assessing those investments they made or thinking about the valuations they were getting. Were we being crazy doing that? So you get cycles. The reality is our world without innovation will be stagnant. It doesn't go anywhere. We need new drugs. We need new technologies. I mean, that's a given. Moore's law in technology, it's a given. So it's like water. It will find its way. It will find its path one way or another. My personal view is, in this moment where we're in the risk-off mode, actually it's probably the best time to be investing because you find things at better valuations. So your chances are that if one of them works, you get a much higher return than you would have done if you were investing at 4 times the valuation it was before, it is today. So I think investors who are sufficiently savvy and are not just following momentum are absolutely there. But a lot of the momentum followers kind of evaporate during these times, which is natural. So you get back down to the hardcore investors, and there's a lot of interest and a lot of money out there.